Okay, welcome back to another monthly update for the portfolio. We are sitting at $6,472.68. Let's go ahead and just dive right in. I made quite a few changes to this last month, just making sure that I wasn't holding anything that I didn't want to hold and that everything that I have some type of conviction for it. So let's go ahead and go into activity really quick. Let's just go by a type and then do dividends only really quick so you can see exactly what we earned. So only one payment, $13.83 from JPQ, and that was our only thing from January. And then there's a little 22 cents as well from the same, just like an adjustment. So let's go ahead and go back to the portfolio. Let's scroll down and just go through each tab. So our first one is tech. This is our most heavily weighted one so far just because of growth, but this one and financial are both at 30%. So if we click on tech, our biggest holding is going to be Google. Then we have Meta, ASML, AMD, Microsoft, and CRM. You can see these bottom two ones aren't actually filled yet. This is because I reconsolidated or rebalanced the portfolio. These positions weren't in it yet, so I added them after the fact. Microsoft just looks really good, even though they do kind of have some runaround deals going on with OpenAI right now. They're still growing their top and bottom lines by a pretty heavy margin, and I think their cloud services is just going to keep growing and growing and growing. Same thing with CRM. I don't think the software as a service model is going to get obliterated anytime soon. I think if anything, Salesforce is just going to keep growing when they start using more and more AI incorporations into their product. I think it's just going to be more of an attractive offer for these big companies that are using their service. Meta is pretty self-explanatory. They're just expending a lot on CapEx right now, and that's to just build out their own platform. They don't want to be kind of tied to Google or Amazon or any of these cloud services that they might have to kind of relieve some of their funds to. So everything makes sense, I think, in this pie, and that's why I have everything allocated as it is. These portfolios or these numbers here are not actually like a set target, but like if I see Microsoft is at 10% and let's say it's only at like a 2% weighting because the stock hasn't done good, I might see that as a buying opportunity, and then I just know that I want to put more into there. So kind of like signals for me. Now let's go back to the main tab here. Let's go into financial. Financial, 4 tabs here. I have MasterCard, Visa, JP Morgan, and SoFi. JP Morgan's going to be the one that I keep the eye on the most here, even though they are growing pretty rapidly and they are really getting themselves into technology, more of a fintech company than just like a traditional bank. I'm going to keep my eye on this one just to make sure that if anything does happen with more job loss or things like that, I don't want people pulling so much money where this could make an effect. And then SoFi as well, they are beating a lot of their top and their bottom line revenues. So just a small position for both of these. MasterCard and Visa, I don't think are ever going to be in the red, even if the 10% limit for credit card APR goes through, which I don't think it will. It doesn't really affect either MasterCard or Visa because they don't hold any of the money. They're just making the money in the fees when you swipe your card. So I don't think it's really going to affect these. And both of them are at a good value, as well as they're growing their dividends pretty steadily. So I'm not really worried about that. Let's go ahead and pop into our next tab. We have consumer, we have Amazon, Costco, Cheesecake Factory, Netflix, and then one that I added is Dutch Bros, just a super small position. Now, if we actually go ahead and look at Dutch Bros, the financials here, we can go ahead and pop over to Qualtrim. Looking at this, you might see this 106 PE ratio, and that's exactly what I saw right when I saw it. And I thought, wow, that is way too high. But if you look at the next 12 months or 2027 rather, you're looking at 46, which is a little bit more reasonable. One thing that Dutch Bros just did recently is they are pushing to acquire a lot of new coffee shops. So I believe with the new acquisition sort of east in the United States, they acquired I think 100 or 120 more coffee shops from a smaller brand. So that automatically gives them more coverage as soon as those open up, as well as they're pushing to include more hot breakfast items in their stores, and the stores that can't really accommodate for the hot breakfast items, they're working to make changes so that they can accommodate. So I see this being kind of the next Starbucks. I'm very bullish on them for the most part, but we'll kind of just see how it plays out. I don't want to invest so much capital in them where I think there might be better opportunities like something like Meta or Google, but it's something I want to keep my eye on and have a little bit of my pie in there. Just that way I have a little bit of exposure to this, something that could grow as it's grown pretty exponentially over the past 5 or 10 years. If we go ahead and just look at the revenue, you can just see that it just goes up and up and up, as well as the net income. Our next part of the pie is going to be energy. This one I just have one stock, MPLX. I'm mostly using this for just dividend. I do like oil stock. When I first started a portfolio 10-ish years ago, I was very heavy into like Chevron and Exxon, and then when we had all the shutdowns around 2019, those stocks did very well. So I did really like oil stocks, and I haven't really been in them since, but MPLX seems to be a good opportunity. They have a pretty high yield. They make a lot of high margins. I don't see this really being a bad investment, and as the stock drops, I'm going to be looking to add more. One that I'm also considering is Hess, again, because of a high yield, but they have a pretty high payout ratio. I think it's around 97 or 99%. So I don't know if that's really something I understand and want to get my feet into just yet, but we'll see how that plays out. And maybe it will be something that I add later. Now, another pie, we have Health. Again, this is just a play similar to Dutch Bros, Harmony Biosciences. Now, this one could be more risky. This is probably the riskiest thing I have in here. They are working on several different things, just really like any other health company would be, but they're a smaller company. They have a smaller market cap. So when they do get these products that actually come through, that might be something pretty unique. The stock should do well. You can see I'm up 2 points on it so far. So we'll just hold that one, see how it does. Again, a very small allocation for the portfolio, but we'll check on that one over time and hopefully we do good on it. Now, real estate is our last one. I have Realty Income and Vici. These are mostly just for income. Of course, Realty is a monthly income payer, so we know that one. And then Vici, I think their balance sheet is getting better. They've cut some of their employees. And I think as they're pivoting from Vegas being as busy as it was to being less busy, I think they will still be able to make their money. So while these two are dipping, I'm looking to buy more of those as well. Let's go ahead and jump back into Qualtrim. You can see for that main portfolio, we have this is our value, our gain or loss, our estimated annual income, dividend yield, and then how many holdings we have. So 14. I'm going to look to keep this under 20, especially since I don't have that much capital in this portfolio. You can see what our biggest holding is at MPLX. And then one thing that's cool about Qualtrim, which I just signed up for about a month ago, is you can see also the dividends and when you should be receiving them. So in January, I should have got $5.11. Because I removed JPQ, this was a little bit off, but then you can see for February what we should be getting, a big one from MPLX. And then you can see that our big months are going to be those third quarters or fourth quarters rather from MPLX that's boosting that. Last but not least, we can pop into our last one, which is going to be just our Robinhood portfolio. And you can see that I removed Meta and Netflix from this one, and I'm just holding Honest. I'm dollar cost averaging this one, so I'm down 130 bucks on it, but I'm just buying about a share a day. I think it's like $3, so I'm working to get my share price down. Looking at 207 shares here, I think this is a good long-term play. They have a ton of money. I think if them exiting their businesses or certain businesses like the clothing and really focusing on a few products will raise their free cash flow. And then I think if anything, if things don't work out with the company, I think there'll be an attractive offer for a bigger company to buy them. And then I think that will kind of have the value skyrocket because I think the shares are only at like $2.50. So that's what the portfolios are sitting like. Pretty slow month for January, but I'm hoping that all these kind of buying opportunities I'm able to take advantage of and grow the portfolio. So if you stuck around this far, thank you for watching and we'll see you again in the next update.